Hi, welcome to the Week in Oil from FMXConnect.com. It's Thursday, July 22nd, Aaron Altieri reporting. Oil opened the week trading at $76 a barrel and has remained buoyant throughout the week, reaching a lofty $79 a barrel. Crude has largely avoided the perils of heftier news cycles for finance, but benefited from an earning-driven rally in equities. The threat of a tropical storm sweeping through the Gulf supported prices, though most of the week, but is now perceived as being unlikely to cause disruptions. Corporate earnings have given investors something to be happy about, with the S&P 500 rising 2.6% from Monday's opening of 1,066.85. This somewhat offset the weak housing starts from June, coming in more than 20,000 below the expectations at 549,000 housing starts, a symptom of our bleak unemployment and fearful consumers. Consumption is looking better in other parts of the globe. In fact, IEA reported that China became the largest energy consumer in the world in 2009. Federal Reserve Chairman Ben Bernanke spoke before the House Financial Services Committee, cautioning that while the U.S. economy is still growing, it remains fragile and could benefit from additional financial stimulus. He noted that inflation is small and should be no cause for alarm, noting there is no reason to change course from the lower interest rates policy and underscoring the deflationary implications. One political leader after another have been leaking confident progress reports across the pond ahead of the stress test, but these feel-good evaluations still understate the depth and systematic risks many European banks still face. It should be no surprise that one of 6 Greek banks did not make the grade, and that the European Central Bank has become the counterparty for some of the riskiest loans. There were few surprises in Wednesday's EIA report, reiterating the thin correlation between it and the API numbers. This week's API report showed a drawdown of 0.241 million barrels in crude oil stocks, a drawdown of 0.412 million barrels in gasoline, and a build of 0.979 million barrels in distillate. The official numbers came in with a build of 0.4 million barrels in crude oil stocks, a 1.1 million barrel increase for gasoline, and a whopping 3.9 million build for distillate stocks. Refinery use rose 91.5%. In price action for the week, August crude oil is up $2.83, or 3.5% at $78.84 per barrel as of 1 p.m. Crude has seen significant upside momentum, and today managed settlement above the 100 and 200-day moving averages. Technically, the overall market has shifted to the upside. This week, close above the 200-day moving average has put the bull back into control. FMX Connect technicals now suggest a retest of $79.38. A close above this level will be very positive for the bulls. And now, some fuel for thought from energy analyst Peter Gutel, president of Cameron Hanover. Gasoline use in the latest week was up 1.3%, or 117,000 BPD, to 9.348 million BPD, according to MasterCard's Spending Pulse division. This was the highest demand since the week ended July 2nd, 2 weeks earlier. The previous week had seen a decline of 421,000 BPD in a typical post-holiday reaction. This latest week, for the period ended July 16th, showed demand up 1.6%, or 145,000 BPD, from years' earlier levels. It was the third week in a row showing demand figures higher than year earlier levels. 4-week demand averaged 9.430 million BPD, which was up 44,000 BPD, or 0.5%, from the same aggregate average seen a year earlier. Director of Economic Analysis John Gamble told Dow Jones, "We're still trying to dig ourselves out of the hole we had last year. The 1.6% increase year-on-year is right in line with Dow's 4-week average, which is up 1.9% against year-ago levels. But Spending Pulse's 4-week average is still well below that Dow is showing, or was a week earlier. Dow 4-week demand averaged 9.308 million, 122,000 BPD lower than Spending Pulse's 4-week average. We are not sure one is better than the other in terms of reliability."